This is the video demonstration on merchandising entries. And in this video, I'm going to work the solution for example number 4. Now this example involves the Dalton Company, and they had the following transactions in the month of June. And you can see here an entire series of journal transactions. And then at the very bottom on the requirements, they want us to simply prepare the journal entries to record all these transactions. And these transactions involve purchases and sales. So that's why we're taking a look at merchandising entries. And before you look at this video demonstration, you should already have watched the video lecture on accounting for merchandise operations. Now in this case, we want to do a journal entry for each transaction, and we're going to have to pay particular attention to the dates and the credit terms, because we're always going to have the possibility of a discount, and we always have to make sure that we account for that properly. So to do these journal entries, again, I'm going to use my typical journal entry format in Excel, but taking these one at a time. The very first transaction took place on June the 1st. They purchased merchandise from Adams Company for $5,500. and the credit terms being quoted are 210N30. So this occurs on June the 1st. This is a purchase of merchandise, and it's on credit. The amount involved is a single amount of $5,500. Now, anytime we purchase merchandise, that's an asset, and it's called merchandise inventory. So we want to debit our merchandise inventory. Now, we did not pay for this. If this had been a cash purchase, then I would credit cash. But it's not. It's a credit purchase. So this is going to be a liability. It's going to be accounts payable. And in addition to accounts payable, what I'm also going to do, which is a little different, is I'm going to put accounts payable, and I'm going to put the name of the company, Adams Company. That's the name of the company that we bought this from. Now, the reason that I'm doing that is because whenever I do merchandising entries, we're going to end up with quite a few payables and receivables. And if we don't label these with the name of the company involved, it's going to get confusing, because later on I'm going to start paying for these things and getting discounts. So I'm going to have to go back and look at what happened. So it's always a good idea with a merchandising company on your payables and receivables to label it with the name of the company. But that takes care of the very first transaction on June the 1st. Now, the next transaction occurred on June the 4th. And it says, at Adams' request, we, Dalton Company, paid $75 cash for the freight charges, and it says reducing the amount owed to Adams. So this occurred on the 4th. The amount involved is a $75 shipping charge. Remember, anytime it's a single amount, very simple, just a 2-line entry. In this case, we are paying $75. So I know that I have to credit cash because I'm paying that. Now, I'm paying this for freight, but I'm paying it on my merchandise that I ordered from Adams, and it says that it reduces the amount owed to Adams. That's a very important statement. That's the clue that tells me that I need to debit accounts payable Adams, because it says by paying this $75, that's reducing what I'm going to have to pay them down the road. So that's why I want to record it in that manner. So that takes care of that transaction. Next transaction is on the 5th. This one is a sale. This is our first sale in this problem. Sold merchandise to Locks Company, $4,000. Credit terms are 210N30. The merchandise had cost $2,500. Notice they're giving me two different amounts. And remember, I talked about this in the video lecture. Every time you have a sale, it always requires 2 journal entries instead of 1. So on June the 5th, it'll be 2 journal entries instead of 1. We're going to do one for the retail price, one for the cost. The retail price, it said, was $4,000. The cost of the merchandise, they gave us that amount, $2,500. So it was sold for $4,000. It cost $2,500. Requires 2 entries every sale. Now this is a sale. In this case, it is a credit sale, not a cash sale. So I don't want to debit cash. Instead, they owe me the money. So I want to debit accounts receivable, and then I'm going to put the name of the company, Locks Company. So I'm going to debit accounts receivable, Locks. Then I'm going to credit sales. So that's the way to record that. Now, if that had been a cash sale, I would have had cash up there as the debit instead of accounts receivable. And then I also have to record the cost. Well, we always do that the same way. We talked about that in our video lecture. It's always a debit to cost of goods sold, and then a credit to merchandise inventory to show that the inventory has been sent. It's been taken out of inventory. So that's our first sale of this particular problem. Now the next transaction is on June the 8th. This is yet another transaction very similar to one that we had earlier. It's another purchase. It's $5,500, but it's a different company that we're buying from. It's the Welsh company, and the credit terms are different. It's 110N45. So this is occurring on June 8th. $5,500 is the amount. It is a purchase of merchandise inventory. So I want to debit the asset, merchandise inventory. It's a credit purchase, so I don't want to credit cash. I owe this. It's an account payable. And to be specific and help me with my labeling, I'm going to label it as Welsh Company. Then on June the 9th, I'm going to pay $110 cash for shipping charges related to the Locks Company sale. So this is on June the 9th. I'm paying $110. Since I'm paying this with cash, I want to credit cash. That lowers the asset. On the debit side, what am I going to debit? Well, in this case, I had a transaction similar to this earlier, but in this case, it's a little bit different. If you go back and look at this on the 9th, I'm paying shipping charges, but it's related to a sale to Locks Company. So that's a little different, and sometimes this confuses people because, for example, back here on the 4th, I paid that $75 shipping, but that was shipping on a purchase that I made. So I debited accounts payable. This is different. I'm paying this for my customer. So that's different. So I actually want to debit freight charges. Because by debiting freight charges, that's an expense account. When I pay the shipping for a customer, that's just an expense to me. It's just costing me money. So I want to debit freight charges, 110, credit cash, 110. Then, June the 10th, Locks returned merchandise that did not meet their specifications. It had cost $300. It had been sold for $500. So this is on June the 10th. Now remember, we talked about this also in our video lecture. From time to time, if you do have a customer that's unhappy, maybe they will return. Now they quoted us 2 prices there, $500 and $300, retail and cost. This is going to require 2 journal entries, one for retail, one for cost. Now it's almost going to be a reversal of what we did previously. So previously I had debited accounts payable or accounts receivable for the Locks Company. Well, now I want to credit that because if they're returning this, it's reducing the account receivable. They don't owe me as much. And then down here, I want to reverse this journal entry, merchandise inventory. And cost of goods sold. So if you look at it, this is an exact reversal of this entry, and this is almost an exact reversal of that entry. So the only other thing I have to figure out is the debit title for the $500. Well, remember, we have a special account set up just for situations like this, and it's called Sales Returns and Allowances. So that's the proper way to record that return on that merchandise. The next transaction is on June the 12th. It says, after negotiations with Welsh Company concerning the merchandise that did not meet our specifications, we are going to receive a $500 credit memo granting a price reduction. Now remember, whenever people are not satisfied, sometimes there is a return, and then other times they just give you a reduction. Well, in this case, we're receiving a price reduction, so that's a little different. So this is occurring on the 12th, and it is a price reduction of $500, so it's a $500 entry. Now this price reduction, this is going to reduce what we're going to have to pay. It's going to reduce what I'm going to pay to Welsh Company. So previously I had credited accounts payable Welsh. Well, since this is reducing what I'm going to have to pay, I actually want to debit accounts payable Welsh. I don't have to pay as much when I finally pay that bill. And on the credit side, merchandise inventory, because my inventory is going to be less costly because I'm getting $500 off on that merchandise. So that's the proper way to record that transaction on the 12th. Now, the next transaction is on the 15th. Here's where it becomes a little bit more difficult. June the 15th, I'm going to receive the balance due from Locks Company. So this is on June the 15th. Now, when you start receiving payments and making payments, that's where it gets a little confusing, because you got to consider the possibility of discounts. So in this case, I'm receiving the amount due from what company? From the Locks Company. So I'm going to receive cash. I'm going to skip a space in between, and then I'm going to come down here and actually credit accounts receivable Locks. Because if they're paying me the money, it's no longer a receivable. I've received it. But I'm going to leave some space in between there because I might have a discount potentially. So here's where my labeling comes in handy. If I'm going to credit accounts receivable Locks, I want to go back and look for every time accounts receivable Locks appears in these journal entries and make sure I use the proper balance. So if I go back to the very beginning, where do I see it? Well, I see right here. Accounts receivable Locks is the first time it was used. We debited it for $4,000. Then I see it again right here. We credited it for $500. So if we debited it for $4,000, turned around and credited it for $500, that means right now it's $3,500. So you see how that labeling helps you recognize all the different times it was used. But when I receive that money, am I going to receive the entire $3,500? Maybe, maybe not. They might actually get a discount. So I have to now consider that. So to do this properly, I want to back up and see, when did I first sell something to Locks?